So when we're talking about Roth conversions, one of the most important things we look at is your overall tax rate. So this can be your marginal tax bracket as well as your effective overall tax rate, but that's the main thing we're looking at. We are comparing today's tax rate to your projected future tax rates, and if the tax rate currently is lower than the tax rate that is projected to affect you in the future, then we're going to go ahead and process those Roth conversions and move ahead. The goal with that being to pay a lower percentage of taxes today than we would be otherwise forced to pay those taxes at a higher percentage in the future. So what this does is it allows us to effectively remove some of your tax liability by shifting the income to today rather than take the income in the future at those higher tax rates. So we can move the money from the traditional IRA to the Roth IRA, paying less percentage of taxes than we might have otherwise been required to. Some other things that go into your overall income calculation are whether you're taking Social Security, whether you are withdrawing from your IRA, whether you are working in the current year, what your total income is. But that's really what we look at, is total encompassing income and what tax rate you are paying in the current year versus those future years' tax rates. Something else that is very, very important to look at when processing these Roth conversions is the marginal tax increase of your Roth conversion. So a situation that we run into often is individuals that take Social Security but may not be drawing off of their traditional IRAs as heavily currently. This creates a situation where not all of their Social Security is taxable, right? And so what you have to be careful of is when you do decide to convert money from traditional to Roth, that can have unintended consequences that you may not be thinking of, such as increasing the amount of Social Security that you pay tax on, as well as affecting your AGI, your adjusted gross income, for the purposes of certain tax deductions or tax refunds that you may not realize are being affected by doing those Roth conversions in this year. However, the cost of those still needs to be applied to the Roth conversion amount, and that will affect your Roth conversion marginal tax rate, which will ultimately affect whether or not the Roth conversion is good and suitable for your situation in this year, because the total cost of that Roth conversion could be 15 or 20%, even though your income says you're in the 12% tax bracket. So let's fill up that 12% bracket to avoid paying 22% taxes when RMDs kick in down the road. But because of those other costs that are commonly disregarded by non-financial professionals, you could end up paying 20, 25, 27% on that money that is converted. So you really have to pay attention to the total cost of the Roth conversion and what that means for your financial situation.